I have found a secret trading strategy that is guaranteed to make you a millionaire within the next week. Is something that you've probably heard a million times over, but in this video, we're gonna do the opposite. Because I'm gonna show you the exact strategy that allows me to wear the watches that I do, buy my dream house, and pretty much live life exactly how I want to. So if you're tired of listening to random people that just wanna sell you a crappy course, well then this video is for you. Now before we dive into this strategy, there's something you guys have to understand, okay? 90% of the gurus you watch have already been exposed. Listen, I've put out a few pictures here, right? But that doesn't even cover a fraction of all the frauds that we've seen in this industry. They make literally everything complicated and vague so that you think, okay, well, if I buy their course, well, then I can finally learn their crazy strategy. And without knowing, complete beginners are buying concepts that they could learn for free on YouTube. It's just packaged differently and made, complicated for absolutely no reason. Now, yes, I have a Telegram group, but first of all, I haven't made any money from it. Second of all, I've also spent weeks creating a course with basically no paywall, and I've traded live on stage in front of thousands of people. I've done this for nearly 8 years. I've never sold anything trading related. I'm not here to sell you anything complicated. I'm here to tell you exactly what you need to know. So let's break down the exact strategy that I used to trade on stage last year. Now, the first thing you need to understand is that we have 3 market conditions. Okay, we have ranging, we have downtrending market, and we have uptrending market. Those are the 3 conditions a market can trade within. So a ranging market, simply put, is a consolidation, right? We have a resistance level and we have a support level, and price cannot figure out where it wants to break out. And so what it does is, it bounces in between those 2 levels. That is a ranging market. Now, a downtrending market is the opposite. It's directional, which means it is lower highs followed by lower lows, and it is exactly a market like this that we want to short. Now, an uptrending market is again just like a downtrending market, but in the opposite direction. So again, a directional market that's built upon higher highs and higher lows. Now, the problem is everyone knows this, right? We all know how to identify market structure, but the problem is it's not as simple on the actual chart. Now, this is actual market structure, okay? Very non-predictable, vague structure. And if you come into a market expecting to see what you were taught in the beginning of your career, well, then you're in for a massive surprise. Because again, this looks nothing like higher highs, higher lows, or none of that stuff. But I have a secret. I know exactly how to read market structure. And I'm not saying that to sort of put myself on a pedestal. I'm saying that because I'm about to show you exactly what I've done throughout my entire career. So it all comes down to highs versus lows and support versus resistance. It's very simple when you think about it. So let's break down this chart here, right? We have a market that's seemingly uptrending, but if you were right here, well, then it would be very difficult for a normal person to understand where we're actually going. And that's when we have to look at highs and lows. So for example, let's take this low, right? The market came down. It swept the orders that were resting below the low here, and then we got no additional follow through, and that's exactly what this X here represents. Now, the next thing we do is pay attention to highs. How does the market react to hitting a high? So we look at that, right? And again, we got follow through above the high, and that immediately tells me that buyers are in control. Why? Because sellers can't push price below lows, but buyers can in fact push it above highs. You can also look at this as resistance versus support. So we have a resistance level here, right? And we have a support level here. So support is holding, resistance is breaking. Why? Because buyers outweigh sellers. Now we can also do this a little bit more specific or faster, if you will. This is exactly what I mean. We have a low here, right? The market came down, swept the orders resting below that low, and we got no additional follow through. What we can then do is use internal structure, right? The small highs created within that downtrend before we swept the low. So let's see what the market did when we actually swept that internal high. We again got follow through, and this allows for an early entry within an uptrending market, and that is, in simple terms, exactly how I evaluate market conditions. So let's break down a naked chart together so that you understand exactly how to apply this. We are going to use the daily Bitcoin time frame. Now, as of recently, Bitcoin has been in a very, very bearish market. So let's try and see whether we could actually have predicted this, knowing the market structure that you're about to learn. So it all starts up here, right? Let's go back in time so that this becomes easy to understand. The first thing we have to pay attention to is the way the market reacted to sweeping highs. So it all starts here in August of 2025 when Bitcoin actually swept the high that you're looking at right here. Did we get any follow through? Not really, right? Now let's pay attention to when we put in the all-time high of 126,000. Did we see any follow through after we swept that high? No, not really. Now notice how the market reacted to sweeping highs during the uptrend, right? So we obviously saw massive displacement above the highs down here, right? But if we now compare that to the low, you can see a night and day difference. So this is very similar to the example I just showed you a minute ago, right? We sweep a low, we get no follow through. The moment the market runs above the internal high that you're looking at here, we saw follow through, and that would have allowed you to get a very, very early entry. Back up here, what we have to pay attention to now is the way the market reacts to hitting lows, because obviously we're seeing no follow through above the highs. And there we go. I mean, already we're seeing more follow through at the lows in comparison to the highs, right? I mean, here we saw basically just wicks above the highs, but here we're actually, seeing some candle closures. But this is still not enough for me to want to enter a position. I need a little bit more confirmation, and that's exactly what I'm getting right here. We have another high, right, that the market swept, yet right now we're seeing no follow through. And there we go, right? We see just a night and day difference. Every time we sweep a high, well, then no follow through. But when we run a low, well, we at least get some follow through. So what we could do in a scenario like this is pretty much enter based on market structure. So we could, for example, use our Fibonacci extension tool. We could go short from the first of the two zones, keep a rather large stop loss, and then anticipate that this is in fact going to be a downtrending market. So unfortunately, we were just inches away from getting filled, but you get the point, right? When we sweep highs, we don't get any follow through, but when we then, as we just did once more, sweep the lows, right? Well, then we get massive follow through. But let's try to keep going here, okay? So when we get a pullback, right, we know that this is likely going to continue crashing because, again, we've already established that this is likely a bear market. So all we have to do is find some sort of entry. We could, for example, use our Fibonacci extension tool once again, switch it to a premium and discount, and enter it at the middle of the range. So let's do that instead, right? We're going to enter at the middle of the range because that is exactly where a lot of these pullbacks actually tend to end. Let's target a 1-to-2 risk to reward ratio. And there we go. As you guys can see, we actually ended up hitting our take profit. And the market structure we got following that even confirms that this bear trend was going to continue, right? Because look at all the highs that we hit alongside this consolidation, right? We saw no follow through above any of the highs that were hit, right? So, I mean, right here, you would almost certainly know, if you know the market structure that I've just told you, that this bear trend was going to continue, and it got confirmed when the market closed below the low that you're looking at here. So let's look at a few examples where this actually worked and exactly how I enter my trades. And I'm not kidding. I actually shorted this entire market, right? This is my live account. We have USDTM, that stands for live account. If I now switch to demo, you can see that there's no data. Go back. You can see those short orders. So I actually shorted, Bitcoin as it was selling off, and I made a good amount of profit, right? Of course, we had some losers here and there, but overall, we were profitable just shorting the market based on the analogy that I just taught you. Now, in example number 1, we need a clear chart, clear mind, which means a clear trade, okay? This is a saying that I always repeat to myself. The goal is simple. Make everything as simple and clean as possible. None of that overcomplicated nonsense. So let's just start evaluating this chart, okay? So first of all, right here, we of course saw no follow through above the high. If we now compare that to the low, which is right here, right, then we obviously saw a night and day difference. We're seeing massive follow through. And if we now look at the rest of the highs, so for example, this one, you again see the same pattern, right? We have no follow through above the high, but if we compare that to the recent swing low that was made here, you can see a night and day difference. And this continues down, right? So what I'm going to do is take the high that you're looking at here. I'm going to use my Fibonacci extension tool at the low down here. And I'm actually using a very specific Fibonacci extension tool setting. Okay, I call it my golden zone, and it's these two right here, 0.71 and 0.79. So let's wait for an actual low to get established here. And it looks like that was it. I'm going to follow along with my Fibonacci extension tool, and then I'm going to get ready to short off of the first of the two zones. I'm going to keep my stop loss at the high you're looking at here, and then I'm going to target the lows that we have all the way down here. And that gives me a 3 risk to reward ratio. Let's play it out and see exactly what happens. And there we go, right? It took a little while, but eventually we did hit our take profit. And the only reason why we were able to do that is because we knew that this was in fact a bear market. Now, this next trade I'm about to show you was actually a trade that I shared with my private community. And as you guys can see, we ended up making a good amount of profit here. So again, example number 2, where most traders actually end up messing up their position, okay? The goal here is to have faith and trust within your system. So let's again analyze the market condition, okay? This is exactly what the market looked like when I approached it that given morning. I'm going to look at the highs, and again, I see a very similar pattern, right? We saw no follow through above the high that I've just annotated. Now let's continue to keep that analogy in mind as we go lower, right? We had already established a swing low here, and we obviously saw massive follow through. Now, when the market then made a high, which it did right here, we again saw no follow through above the high, right? And if we compare that to the low that was made before that, well, then again, there's a night and day difference. And again, it sounds like I'm repeating myself here because I am, right? Again, we sweep a high, no follow through. Let's compare that to the actual lows here, we again see a night and day difference. So in other words, I was very confident that this was in fact a bear market. And so I was looking to capitalize on the pullback that you're looking at here. Now, most of the time, when you get a pullback within a downtrending market, it is not going to sweep the highs of the previous pullback, right? So it's not going to do this. More often than not, it's actually going to do something like this, right? It's going to stop right before it sweeps the high of the previous pullback, and then it's going to continue that downtrend. And that's exactly what I was looking to capitalize on, right? So I used my Fibonacci extension tool, draw it from the most recent pullback down to the low that we had just created. And then in a case like this, I'm just going to target the low that we've just created, which leaves me a risk to reward ratio of 2.5. And boom, as you guys can see, we got very close to getting a stop out, but at the end of the day, we did in fact hit our take profit. Now, a lot of traders will completely mess up their entire position here because they get super frustrated when price goes against them. But as you guys can see, each and every one of these candles actually ended up, respecting my 2 zones. They all closed within the 2 zones. And so had I done what 99% of traders would have done in a scenario like this, I wouldn't have made any money. When in reality, all I had to do was just lean back, relax, let my system do the heavy lifting. And if it ended up being a loser, well, then so be it. It's part of the process. Now, in this last example, I want to show you the raw reality of any given system. And the goal is simple. Don't overtrade to compensate for a loss. Now, this is a universal rule. Never, think that you have to trade in order to try and make back the money which you've just lost. A loss is simply the cost of doing business. What you get in exchange for a loss is information. And what you can use that information for is figure out what went wrong and what you can do better next time. So in fact, it's necessary in order to grow. Anyway, let's break down exactly what happened here. Again, I'm going to pay attention to the high that we swept, which is the one you're looking at up here. Immediately, I see that we got, basically no follow through above that high. And if we now compare that to the lows here, well, then again, we see a massive difference, right? We got massive follow through below the lows when, the opposite happened at the high. So what I'm interested in here is essentially trying to capitalize on this downtrend, but I want to do it before we sweep the low of the range, which is the one that you're looking at here. Until this is swept, I'm going to anticipate that this is a bearish market. Now here I can do one of 2 things, right? I can either try and short the market from the most recent pullback, just like in the previous example, which is right here, which would have mean, had I done that, I would have been filled already. Or I can try and aim for a larger trade, right? And that is to take it off the entire range. Now, what you do here depends entirely on the context of the market. So let's see what would have happened had we taken the first trade right here. That would have obviously been a loser, right? Now let's try and take the one up here. So the entire range, keeping our stop at the high and our take profit all the way down at the range low for about a 3 risk to reward ratio. Let's play it out. And would you guys have a look at that? We got super close to hitting our take profit, but then it all reversed on us and actually hit our stop loss. Now, this is exactly where the majority of people will end up liquidating their account, prop firm account, whatever it is that they use, because they got so frustrated that they were almost right and then not. The problem here is your brain. right? Your brain wants to be proven right. And so when something like this happens, it immediately wants to prove itself otherwise. So what your brain is going to do, right? It's going to tell you to keep trading and trading and trading until you make back the money that you've just lost. Why? Because it wants to remove that uncertainty that this nearly win then loss, have given you. Your brain enjoys certainty, right? And trading is the opposite. So when something like this happens, you simply cannot trust your brain. In other words, you have to make sure that your brain is working for you, because in most cases, you are working for your brain. Ladies and gentlemen, thank you so much for watching this video. If you want to join my private community and trade alongside me, see exactly how I view the market, well then don't be afraid to check out the link down below. Without further ado, let me know in the comment section down below if this is a strategy you're going to be using. Maybe you're already using something similar. I want to thank you for watching this entire video, and I will see you in the next one.